who's here?
Whoa!
Jersey Mark.
Another week has gone by. Fred, you know what? It's amazing how quickly time flies. If you think about that for a minute.
Yes,
I mean, 7 days have passed since we had our last show. Okay. And between the last show and this show, I mean, look what happened there last Monday. Last Monday was World Peace Day. Okay.
Oh, wow.
World Peace Day. That's amazing.
It is.
It's an incredible day.
Did you record a video? I unfortunately was unable to, but did you record one?
I recorded many videos.
Oh, for World Peace. Okay. I fell a little short, but I do believe it in my heart. So, hey, watchers, it's Mark Katona and Fredrick Hicks yet again on a Financial Friday. Thanks for tuning in, and we really do appreciate your presence today. And we're going to talk about some great topics. And this week's topic is going to be about Medicare and long-term care. All right, this is right down Mark's lane. If you guys did not look at his book last week, I think you should definitely get it. As you know from last week's call, I learned something about Mark, that he is a published author. Oh my goodness, there it goes. Tell us about that book, Mark.
Well, the book emphasizes all of the different ways to collect Social Security. And when I say that to you, it's a very general statement because there's over 487 ways to collect. Now, we didn't go into complete detail on 487 ways, but man, if you collect at the wrong time, you can disinherit yourself or your significant other, your spouse, hundreds of thousands of dollars. So it really does pay to speak with someone like Fred Hicks or Marc Katona, to help you in your area. There are people out there that can really, truly help you. Fred and I specialize in things like this. Came far enough as writing a book last year because I see the importance of it. I see so many people making horrible mistakes that these mistakes will last them the rest of their life just because of pure ignorance. There's opportunities out there where people can learn, but just that they choose not to, okay? Basically, I mean, they say 99.9% of our society is financially illiterate, okay? And I think a lot of it has to do by choice, okay? Realistically. If anybody, you can see tax income planning to Financial Friday, you see the hashtag Financial Friday to 36260. That will give you an opportunity to go inside a video library and learn. Okay. We're giving these free courses out there for the world to come in and learn with. And Fred and I really are pumped up because we're on this platform that, we've always dreamed of being on this platform, haven't we, Fred?
Yes. It's a great honor to be able to speak to so many that need our help.
And we say so many, but I mean, we're looking at 99.9% of our society is financially illiterate. That is a horrible statistic. So there is many people out there that need help. You just have to have the oomph, enough courage to seek help. We're here. Fred and I belong to a 501c3 nonprofit speaking bureau. We go out there and we teach communities, unions, associations, places of worship, employers, even HR directors. Imagine we teach the HR directors, okay? Because they need to learn as well. They need to learn the right things to do while they're dealing with certain situations, okay? They represent hundreds, if not thousands of employees. They want to make sure they're doing the right things as well. So we're excited. We're excited to get this show started. We're excited to work with people, help people, but you guys are going to have to be the ones out there. You're the ones who make the difference. You're the ones who pick up the phone, get people like Fred Hicks and myself to help you. We're looking forward to it. And I'm looking forward to this topic because Fredrick Hicks is a master at Medicare and long-term care. And I am just totally excited to hear Fred.
All right. Well, you've opened a huge floodgate. I hope I don't disappoint. So, guys, when it comes to what you just heard Mark talk about, financial literacy, this is one particular area where I think that many people might not necessarily might not understand it so much as they have a limited understanding of all the rules and regulations associated with it. So many Americans are already on Medicare and they're already getting their benefits, but what they're looking at is in the moment benefits. They're not looking forward. What does the future look like? Will I need long-term care? And does Medicare address it? That it doesn't uproot you and change your lifestyle or require you to do something like going to Medicaid, which would definitely make a change in your lifestyle, okay, because of what's required. Now, there are ways of being able to navigate the Medicaid road without giving up your lifestyle, but it's a process. So we won't particularly get into those weeds today with you, but we're going to get into just in general to just get your mind thinking, okay, about it. So let's share here and let's take a look at what our options are. And today's presentation is, does Medicare cover long-term care expenses? Now we know all are familiar with the red, white, and blue card. Okay. Those of you who have arrived at that station of life already can look in your wallet or purse and know that that is the most important document when going to the doctor's office you can have already readily available and in your hand next to your driver's license, right? So this is how many of us perceive healthcare expenses, and I'm telling you that you shouldn't worry. Just be prepared. And those of you who are entering that world or coming up to it, be prepared. Those who are in it, don't worry. Okay. Unexpected healthcare expenses are life. It's going to happen. Okay. How you deal with it is what we want to talk about today. And how do you address it before it becomes a stressful pain point for you? So let's move forward. Healthcare costs are constantly rising. The average worker, as you see here, 40 years old, is paying about $335,000 in just healthcare expenses. Okay. When you live to your 90s, it can be as high as $500,000. That's a big number, isn't it, Mark?
It's a huge number. I mean, those numbers are just constantly rising every single year as well. So
in your 90s, imagine that. That's painful, extremely painful. So you are not working with any luck at 90 years old. I mean, maybe for those people who are in better shape than the average population, they might be doing a little bit of something, but I to stay busy. But I can't imagine anyone making enough income in their 90s to meet that obligation. So you need Medicare, but you also have to focus on, will long-term care, will your health be like it is today? Or will it look a lot different than what we see now? Okay, or what you see now. So know your benefits, right, Mark? Know your benefits.
And there's lots of benefits there. There's lots of benefits that you have to consider. This is a great slide.
And many people working, this particular slide here is addressing those people who haven't entered the Medicare world. Look at what it looks like in this little flow chart here. These are the topics, or the high level topics, that you're going to need to understand and wrap your mind around. Medicare does have it covered, but how much does it cover? It doesn't cover everything. And that's what we're going to discuss here. So, does Medicare cover long-term care? Well, it doesn't. I'll just answer it directly. Okay, there's certain ways to receive a certain amount of skilled nursing care and other avenues up for a fixed period of time, but it typically does not cover things like custodial care or skilled nursing care, okay, especially custodial care. So many workers right now are under the illusion that Medicare will cover that. But custodial care versus skilled care, custodial care is absolutely not covered. So if you're familiar with the home care program, Medicare, when it comes to skilled nursing care, only covers it up to about 100 days. And if medical care is necessary, then it may put you in other areas of where Medicare can fulfill that obligation. But it will not be something you will be able to rely on without some form of long-term care. Right? Right, Mark?
Totally, and it's amazing. It hits people right between the eyes. I run into people every single week when we have the conversations, especially those people that are approaching the age of 65 that will be having a Medicare available to them, because that's the goal. That's the age 65, and they are totally under the assumption that long-term care is completely part of the Medicare process. So, and it's not. Okay, so it's a wake-up call.
It's a wake-up call. So custodial care includes stays in nursing homes or assisted living facilities, and again, is dealing with the activities of daily living. I want to stress that getting dressed, being fed, and bathed are usually the usual suspects that happen first. So getting dressed and bathing yourself per Medicaid are the two most popular triggers. Okay, and look at these lovely ladies here, first responders, right, Mark?
Yeah, absolutely, can't say enough about them.
All right.
Yay!
We're blessed to have them. Okay, so the game of chance. And boomers is the generational positioning where we're at right now as it relates to generational intelligence. Boomers are utilizing the system more at this time. I know some of you don't like the term boomers, and I get it. Okay. But it's really just describes baby boomers, even though some people have kind of turned it into some kind of degrading title. And for this example, we're talking about 70% of boomers when they need custodial care or any type of long-term care. The average mortality is an average of 3 years. Now, guys, if you look at it the way I see it, when I arrive at your station of life, it's less about money. It's more about dignity. And if that really hit you in your heart, that's exactly what I wanted. It's not about how much money you leave behind, it's the dignity as you transition out. Okay. And I want anyone, even my parents, to leave this earth at the highest level of dignity so that they feel as if all of that skin in the game that they put in to make it this far was just completely not destroyed and distorted because they failed to plan, so you plan to fail. Now, in my particular situation, my parents did not know enough about long-term care to have had it. And when they discovered that they needed it, it was too late. So as a caretaker myself for my parents, I make sure that I am stepping in and helping them, and I'm in a position to help them, fortunately enough. But what if I wasn't? Where would they be right now? Okay, ask yourself the same question.
Hey, Fred, minimum ages, maximum ages, okay? Minimum age to qualify for a long-term care policy.
Well, we'll get to that in just a moment. I'm glad that you said that, though. That is something I will cover here in just a minute. But according to Genworth, and I'm sure we all know, familiar with Genworth, the cost of any type of care begins at $4,300 and can be as high as $8,500. So over 3 years, that's about $250,000, guys. That's a lot of money. And if you didn't save for that, okay, you might have an issue. Okay, we might be able to get in front of it, though. That's the good news. So make sure you're positioned to make the right decision by asking these 4 key questions. And the 4 key questions are, I'm going to cross my fingers and hope I don't need long-term care. How is that working for you? Well, how would that work for you, Mark? Is hope a strategy?
Never hope is not a strategy. No.
So what's highly recommended is that you go out and look at buying a long-term care insurance policy. And I do get that they can be expensive, and I can understand also that you might feel like it's over your head. It can be complicated, but let's simplify it. That's what Mark and I do very well together. We simplify the most complex financial topics and break it down so that you don't have to have our level of education. You can come into it saying that I've got the right people working for my best interests. Okay. Do I need a long-term care insurance policy? Well, guys, it's only 2 factors that determine that. And that's how wealthy you are and your family's history of disease. That's how you measure it. Those are the only 2 questions. I know it sounds too simple, but how wealthy you are and the history of family disease are the 2 questions all you need to ask. Once you determine that, if you're too wealthy, then, $2 million sitting in an account or more, you can just write a check for it, couldn't you? I mean, there's really no discussions. However, the average length of stay in a nursing home, less than 2.5 years, equals to about $250,000. That's no chump change either. And remember, the money you take for other things means less money for you to use, and you don't know how long you're going to live. I know 2 million, 10 million might sound like a lot, but looking at the cost of living, inflation, and healthcare, it can wipe that out just like that. Tell me I'm wrong, Mark.
You're 100% spot right on. And you said a word there, inflation, cost of living. I mean, that's $250,000 in today's dollars. But just everybody's got to think of the factors of the power of our dollar going forward. Okay. And you said it, Fred, you a little while ago, you talked about, that's the average cost today. There's no caps on this pricing, okay, in nursing homes today. There is no caps at all. So pricing of medical, it just keeps going higher and higher. And there is no caps for the cost of when these carriers are increasing their bills to clients. So, and they can go, I've seen them. I've seen 51% increases in a year. Okay. Yeah. 51% in 1 year.
It's going to skyrocket even more. It is. It's going to skyrocket even more because it's a large weight on the system. As I said in the previous presentation, Social Security is not going anywhere. It's just too many people aging out of the system. It's a lot of people reaching the attained age. and that is a bear on the system. So as long as we have payroll taxes to keep things moving forward, the worst that could happen is that Social Security, your benefits could drop by about 1/4%. Well, that 1/4%, and looking at all these different aspects of it, these are the weights that weigh on that $2 million. $10 million could come down to, if you needed brain surgery and it exceeded what Medicare will cover, or even what a supplemental plan will cover, you become the co-insured, don't you? So it can wipe out the estate. Healthcare can wipe out the estate. So it's not about being too wealthy. The old adage, there's never enough, probably plays very well when it comes to healthcare expenses. So what if you're not wealthy? Okay, so let's take a look at that. What if you are in a position where you save too little, too late for long-term care? Well, it's a little bit different because you have less. Let's assume you have less than $150,000. A 2-year stint in a nursing home will absolutely wipe you out. You see this blank check over here? Nobody has a blank check. And typically, if you do have a blank check, what does that mean? I'll gladly pay you Tuesday for your long-term care today. Well, how's that working for you? Because they require you to pay it up front. So there will be no long-term care. So I always use that statement when anyone says anything. It's an old Popeye Wimpy statement. If for those of you who are thinking about it, kind of tells you what my age is. Because if I know it, then it tells you kind of round about where I was born. I always felt that to be the most hilarious statement, and then I grew up, and now it's no longer as funny. Now it's a more of a philosophy. I'll gladly pay you Tuesday for some benefit today. Okay. So more affordable alternative, if you're in this situation, is Medicaid. But we all know Medicaid is not so much about being insolvent. There are ways of going through a process to not lose your lifestyle as a result of having to go on Medicaid. What I'm talking about is Medicaid service may look completely different than what you could have gotten had you planned. It's limited in nature because it is a government program. It does not give you free reign to choose where and what and how and who's your doctor, what is the background, their experience. It doesn't say that it's going to be a more favorable custodial care or nursing home or assisted living facility. It says that you have to work with the confines of what the program will provide. I'll move on by simply saying, look at your assets and determine where you fall in that range of 150 to 2 million. And can you truly absorb the cost if you had an extended stay in a nursing home?
Hey, Fred, I think we should bring something up too with Medicaid, because it is a rude wake up call, because once you get on the poverty of our health system in the country, that is Medicaid, by the way, okay, and you need to be in a facility. Well, guess what? It's not always the nursing home facility that's in your town. Okay, they could already have rooms that are already full, okay, or they're not accepting. It could be completely across, into another area that you don't even know where it's at. They're going to try to find you a bed somewhere, okay, that would accept you, but it's not always the case. And that availability isn't always there. And that really needs to be emphasized to people, because it's a big strain on everybody else, if there is anybody else to help that individual as well.
Absolutely. That's in addition to thinking about what type of doctor do you have? What type of experience do they have? What type of education do they have? What is the condition of the facility? And that, like Mark just said here, what if it's out of town, out of city, out of state? Okay. If that is the case, there is a huge gap of control that you no longer have. You just got to take what's given. So long-term care does make the most sense. Thanks, Mark. That was perfect segue. So family history of disease, up to 43%. I know that number seems a little high, but it truly is. Insurance claims are tied to Alzheimer's, strokes, cancer, diabetes, and circulatory issues. So you're definitely, chances are, going to need some form of extended care if those diseases are part of your family makeup. That doesn't mean that you're going to have it, but it's in your genetic makeup. There is reason to prepare. If in fact it does happen, you put your best foot forward. Consider your family history. Okay. Dementia is real. I'm dealing with a situation like that right now. So if you do have ability to recover dementia, I keep saying dementia and other degenerative diseases like that slowly wind a person down like a clock, can become very, very, very expensive. So I know it says here that long-term care is much lower on the risk of needing it if you don't have it, but I don't always prescribe to what Mark just said here a second ago about having a challenge or having a disease and having to be moved somewhere else. I can't sit there and say because you don't have any of the mental sides of it that needing it for cancer or something else is less to be worried about. You need to worry about any type of disease. And we know that because look at what we're dealing with right now with the pandemic. Now, the right time to buy long-term care insurance. When is the best time, Mark?
Today is the day that everybody should be considering to purchase. Okay. You can't wait because waiting is just obviously it's procrastination. We as human beings are really good at procrastination because we don't like going outside of our circle and normally learning new things and new habits. But reality is, Fred is saying it, 70%, that's a horrible statistic. 70% of us will wind up needing this type of care somewhere down the road. 70%. That's a huge percentage. So everybody listening and paying attention to Fred and I today really need to consider pick up the phone, get on a phone application and contact us. We can help you. We can help you design a plan that's going to be affordable for your budget. Everybody's budget's different, but we will show you, and we're totally agnostic. There is not one product that fits all. So wherever you're at,
or financial institution,
we're
going to look at whomever is the best fit for your circumstances.
Absolutely. And everyone's situation is completely different. It is not the same. So we will help you formulate a plan. I love the line you used a little while ago. People don't plan to fail. They fail to plan. And this is just a plan. Doesn't mean that you have to take it into action. You should. I mean, statistically wise, 70% of us will need to utilize this plan somewhere down the road. So the younger you start with your plan, the better off you will be prepared.
Absolutely. Just answering your question earlier, that ideally you want to do it in your 50s. I mean, because it's something to say about when you've arrived at that stage of your life, your income is probably at its peak. You peaked out. So you can afford to reallocate funds, or at least we hope you are able to reallocate funds in that particular area so that when you do arrive at your later years in life, that this is already resolved. I'll tell you one thing very clearly, guys, and I want you to really commit this to memory. Long-term care is simply an annuity. Long-term care is simply an annuity. We're going to have an annuity discussion in the future, and that's one of the things that I repeat to people all the time. It is almost like a reverse annuity, just like a reverse mortgage. But I'm not going to go too deep into that because I want to share some other aspects with you. But maybe by the time we get to the end, I can elaborate on that. But if you wait until after your 65th birthday, you may have made a slight minor bad decision just because age equals more expensive. So what do long-term care policies actually cover? Well, they vary, and that's what Mark just shared with you. It is all about sitting down and looking at what you believe based on family history, based on spending plan, based on lifestyle choices. Where do you really, if you could not stay in your home, what type of facility would you be willing to live in? And does it change how you see yourself and see your environment? Because that plays a lot into how you recover or how you maintain. If you're in an area that's undesirable and you're unhappy, your focus will not be as much where it should be on recovery. It'll be on, I am a miserable and I'm unhappy and I can't believe I made this decision. Woulda, coulda, shoulda, but didn't. So it's important to understand where, how, when these policies will kick in. And it usually comes down to what happens during that physical when you go to your doctor and they're asking you what ails you. And you tell them everything is fine. I'm having these headaches, blah, blah, blah. But they're also really asking you, are you able to perform the activities of daily living, also known as ADLs? Mark, do you know what those activities of daily living are? Top of your head?
Absolutely. Absolutely.
Roll those up for our listeners.
Bathing, dressing, toileting, continence, transferring, and feeding.
Good job. This man just proved to you that he's the right man for the job, because there's so many people out here that don't and cannot recite the 6 activities of daily living. They can tell you the 2 that typically get triggered, which is bathing and dressing. But what he just proved to you is that he's fully vested in understanding what can happen if you were to fall into this category of someone needing long-term care. Great job, Mark. So most policies cover the maximum daily benefit of the services he just described to you. But the first 90 days, you have an elimination period. Just like with any insurance policy, whether if it's health care, long-term care, disability, you all usually have in those policies, or they all typically have built into those policies, an elimination period that would need to be met. So on the 91st day, your goal is for this long-term care policy to kick in, but you must save enough or have access to capital to make it to that 90-day period. And most of you will, but it's still something to think about and consider in your spending plan and your lifestyle choices. That's what we help with, right, Mark? So
Absolutely.
Here's what I'm asking all the time. What happens if I don't use the insurance? How many times have you heard that, Mark?
I would say probably 50% of the people that I talk to.
I would say as high as 99.9% for me. They don't want long-term care because they see it as an indebtedness. They see it as a new bill. They don't see themselves using it. Now, if you know anything about what's going on here with families, people are living longer. Now, we don't know when we're going to go. We hope to live long lives, but you have to think about it. You will not be the condition you are today tomorrow. So again, what happens if you don't use it? Typically, you will not be able to recoup the costs. But what if we told you that you could have your cake and eat it too? Well, that's what we're about to go into. You can get a high long-term care life insurance policy. Yes, you can. But take that with a pinch of salt, because what it really comes down to is that there are different types of policies that perform better than others. So you just can't just run out there and go get one. Or someone comes in and sells you one. You need to look and see what are all the nuances that go on with those policies, and does it fit your particular circumstance? So the right plan for me, which you see here with this 3D man here, clicking on, that's what it is. You don't want to get into something that has limited coverage or high copays. You want the right plan for you. And if you don't use it, you don't lose it. It just translates over to legacy monies to your beneficiaries that chances are love you, care for you, and want you to leave this world in dignity. But it's the greatest gift you can give. The most unselfish act of love that you can give is leave something behind for them, for all of the care and assistance and love that they've extended to you, so that they can move on just like you moved on. So I'm gonna get off my soapbox on that, because I really believe that legacy money is very important, because no one wants to start over, and you don't want your beneficiaries to start where you started. You want them to start maybe a little bit better than you did. You don't have to make them wealthy, but what you can do is say, look, I want you to be able to continue on in absence of me. I want you to have great thoughts of me, and this is the only gift I can give you that will allow you to move forward and really not just think of me in the best way, but know that I left you something that was unselfish based on the life of another. All right.
All right. Hey, Fred, you know what? I think that we need to emphasize, by the way, that gift, is there any place on the tax return when I receive that gift?
Oh, wonderful. Go ahead, Mark. Elaborate.
Well, the answer is no. There is no place on your tax return for that gift that you give that loved one that you thought so highly of. You know, because it's called a life insurance benefit. And life insurance benefits go to your beneficiaries tax-free. Tax-free is where you want to be, okay? All day long.
What a gift. No partner.
No partner.
Right, Mark?
No partner. Remember that one over here? No, that one that comes along. I want you. Okay.
Yeah. Yeah. No partner, and you know, they don't get their taste of it. You know, I always say insurance 101. It comes down to that, you know, it's not taxable because there's nothing to tax because you're no longer here. Okay. So, yeah. Insurance 101.
And what does Don say? Don says, and guess what? You're not going to leave him rich, okay? Because you know the government won't allow it. You're limited on how much of that insurance you can have, okay? So, but the great thing is, you know what? If you can leave people with a legacy of knowing that once you're gone, and you're in not on this earth as a human being, you've given a wonderful present to the people that you loved and you left behind. And that was the reason why you named those individuals as the beneficiary.
That's right. You love them and you want to leave them better off in absence of you. So, guys, the bottom line is, because these costs take such a big bite out of your retirement savings, and Medicare is not there to throw you a life preserver, it is important to start early and, more importantly, use every dollar twice. And I know many of you just said, what in the world? So we've got an understanding of what you're saying here, but then you say something like use every dollar twice. You can't use a dollar twice. Well, I have umbrage with that thinking, because there is a way of using every dollar twice. Start saving independently. And we can show you the private reserve vehicles, the savings vehicles that will lend to that using every dollar twice, that will allow you to not only subsidize your lifestyle for long-term care, but will increase your income in retirement. And who doesn't need more money in retirement? If you opt to not buy long-term care, though, and you just say that it's just outside of my budget, I want you to compare a $250,000 long-term care bill and factor that into your equation. And you have to ask yourself, can you afford not to have it? So look at your options. No one says that you want to, absorb the whole amount. Something's better than nothing. But it's at least worth your due diligence to look into it, to understand what may be available for you. If it's 100,000, that's better than zero, because most cases, if you're in that position as a parent, you are becoming what you never wanted to become to your children, and that is a burden. So I want to move on to Q&A, and this is really Q&A for you, but it's really Mark and I exchanging thoughts and experiences, and I'm sure that Mark has got a great war story to tell me here.
I do. I do. I've got a great one.
15 minutes, and let's listen to Mark's war story, and I'll chime in there, but I really just want to give you the stage here. Go ahead, Mark.
All right. So I am 45 years old, and my wife was 40. What was she? She was 41 years old, pregnant with my son. Well, she's in a car accident, and she breaks her right wrist and her left patella, which is basically where your kneecap is. Cracks it. Think about that for a minute. How do you walk? Now she's right-handed, right wrist, okay, left patella. How do you get on and off the toilet? How do you bathe? How do you feed yourself? How do you dress? So my wife Anya at that time was a candidate for long-term care, yet she couldn't get long-term care. Long-term care, the earliest age to get that is age 45. Okay, can't get it if you're 40. You can get it if you're 45. So what I did was, because we lived in the same household, if one's 45, the other one could be under 45. So I went and got a policy immediately. That was my trigger, seeing, you know what? She's a definite candidate, couldn't buy it at that time. So once I hit 45 years old, because I was 44 in a couple months when she had the accident. but it was a relief to get the policy because if it wasn't for my mother and my mother-in-law coming to my home and taking care of my wife, I did for a couple weeks, but still had to work. Okay, they came and they helped us, and we were very fortunate to have that. But without that, I mean, having the parents around to help us. Everybody doesn't have the parents to help them. So got over it, but realized how important it is to have long-term care. And so obviously we went ahead, purchased long-term care policies and have them enforced now. But, selling it and experiencing the need of it, wasn't able to have a policy at that time because of age. But now having it, you said something a little while ago, Fred. You cannot afford to not apply for something like this, And the great thing is what Fred's talking about in these blended types of policies that are out there, you don't have to be 45 years old. You can be younger and have those chronic illness benefits built right into the policy. So you have a lot more benefits with these hybrid policies today. They're built into them just as long as you qualify for the coverage. So, I mean, it's just a wonderful plan, but being experienced to need a product that I was licensed to sell, but couldn't sell it to myself because of age. Once I became of age, there was no stopping me because I saw the value in it. And most people aren't fortunate enough to have family members in the area, or you might have older parents, or you just might not have any family or close friends that could help you. Okay. And not only that, the burden that it could cause on older people or just people who have careers and they have to work and do things. And then if you don't have anything, it's called self-insured, where you're paying out of pocket, like Fred's talking about, being prepared to pay $250,000 today or more tomorrow. And we have no idea what that number is going to be in the future. We just know that it's going to be a higher number. So if you don't react today, I mean, we can only lead you to the water. We can only educate you. It's going to be up to everybody that's paying attention on this show, to Fred Hicks and Marc Catona today, to take that initiative step and start the planning process. That's my story, Fred.
That's a great story. That's a great story. My story would just come down the lines of what I said earlier. I am a caretaker, and it was due to a failure of not knowing. So it fell under the category of just ignorance, failure to know, and that falls up under financial literacy, which is what Financial Fridays are all about. It's about financial literacy, enhancing. You never are learning is ageless. You're always going to learn. I am 50 years old, and November 17th. I'll just go ahead and just say it.
Scorpio.
Yes. Yes. And at the end of the day, I'd like to believe that I'm smarter than I ever was when I was 25. And I can admittedly say that I am. But my parents gave a lot to get me where I'm at. And I respect them, and I love them for what they did, the sacrifices they made. So I don't see it as a burden. I see it as an obligation. But not everyone feels that way.
Right.
And it's nothing saying that your spouses will feel that way, more importantly. And it's hard enough in life to just get through the day-to-day. We're learning that more and more during this time period that we're living in, these uncertain times. But what you've got to think about is stop dwelling on what you think you can't do and just start asking questions. What can you do about it? Is there something I can do about it?
Very well said.
Yeah. And that's where it's at. And when I'm talking with my parents to ease their concerns that, son, you're doing so much, I feel so bad, I remind them that, Mom and Dad, you guys didn't say that to me when I needed you most, and I'm not going to say that to you when you need me the most. So for me, it's emotional. For me, it's mental, and I choose to do it. And what you have a choice here today is you can do something about it using me as an example of what you may not want your kids obligated to do. You can take what Mark has said here as a very good point too. Equally, we have two separate individual points, but that still equals the same, doesn't it, Mark?
Absolutely.
I'm looking at it from a perspective as a caretaker, and you're looking at it from the perspective of a case. But I'm living it. And what I'm hoping that you're seeing is my sincerity, the authentic feelings. I can have some really great war stories with you individually and tell you just some of the things that has happened. And boy, I never imagined that. And I mean, and the cost associated with it, 10 years ago, like Mark said, is completely different than what it is today. And what is it going to look 5 years from now? Will I still be a caretaker 5 years from now? All those questions can be answered with someone who's lived it, see it, wakes up to it. We can do it. So ask yourself, do you want to just cross your fingers? Or do you want to at least engage someone in a conversation? I said conversation, I didn't say obligation. To determine where does aging parents or you yourself as an aging parent might see yourself. And do you want to see yourself in a dreamland that everything is going to work out fine and don't worry, I'll be gone before any of that happens? Or do you want to plan in the event that if it does happen, you have a plan, not a hope? And that the worst thing that could happen is that you leave money behind for your beneficiaries to start at a place where you didn't have the opportunity to start at. And I will conclude it with that for my story. I know that went a little heartfelt, but it's how I feel about it. I think this is the most important conversation to have because it's one that lends itself to how you see yourself exiting this life. Do you want to exit in destitute or exit it with dignity? I think we all agree dignity's better.
Totally agree. Very well said, Fred. I mean, you hit me right here, man. I relate to a lot of what you just said. I've lived it already, with my dad last year. He passed away today, and then I lived it, so I know.
Yeah. Do you feel comfortable talking about kind of any of that, what happened with your father?
Well, my parents are older. My mom's still living, and he died last year, this day, the 25th of September. And he passed away, had leukemia. He had acute leukemia, died in 6 days after he went in hospital. But the year before, he had open heart surgery. And it's a very humbling experience to walk your father into a shower and bathe your dad, for the first time. For those people who've never experienced doing that, it hits you. It hits you right away. So as I'm hearing you talk, I'm reliving that. I mean, those people, how my father feel me doing that? he couldn't thank me enough, but I didn't want thanks. I mean, if it wasn't for the graces of God and our parents, we wouldn't be here to be talking about these kinds of things today. So I don't even look at it as my parents would ever have to thank me. I look past that. It's helping.
It's never about that, is it?
It's
It's thanks for sharing that. I mean, I didn't realize today was an anniversary date. I think that speaks volumes. I really do. I really do. So I learned something about Mark every week. Last week was the published author, but if anything, it just gave his book even more credibility. So, guys, I want to make sure that you do know to text the word income planning hashtag. Go, you. I'm actually let you do it, Mark. I'm sorry. It's your book. I'm stealing your thunder. Go ahead.
It's okay. Well, there you go. And I think it would be really cool, Fred, if we got up on there the texting of. Well, I think that's fine. Here, everybody sees it. They see income planning hashtag Financial Friday to 36260. Put that phone application on your phone, okay? Get on our schedule. We want to help you, okay? And the only way we are able to help you is if you want to help yourself, okay? You're the ones that are going to make the decision what road you're going to travel. Whether it's going to be a road of totally unorganized and discombobulated, it doesn't have to be that way. That's by choice only. You have, I think, great people here that will guide your boat in a direction to the exact place where you want to go. We hold the compass, okay? We have the map. It's your choice if you want to allow us to navigate your ship. So just want to say thank you, everybody. Thank you, Fred Hicks, for another masterful show. I'm sure people out there listening in are going to have questions. Certainly ask them. You can go to this phone application, connect with us. Love to help you. But Fred, what a marvelous show, and excited to be a part of this program. And thank you again, Fred. Another masterful job.
Thank you.
Thank you.
And one last thing I'd like to throw at guys, you can also reach us on social media. One place in particular, I highly recommend so that you can get a chance to know us, peek behind the curtain, so to speak, would be on LinkedIn. You can reach me at Fredrick, Fredrick, Hicks, Hicks, as you see right there. You can also reach Mark at Marc Katona. You see the spelling of his name is M-A-R-C. A lot of people like to put a K there. And Katona is C-A-T, okay, O-N-A. C-A-T-O-N-A. I actually had somebody say they were trying to reach out to you the other day, and because I said Katona, they were like, okay, no, cat.
There you go.
Say cat, and then say Ona, and don't mix it up with Corona.
No, please don't mix it up with Corona.
Okay. All right. So, guys, thanks so much for listening to us today. We've enjoyed you. We hope you've taken a very or we'll take a very strong look at moving forward with getting the questions answered regarding long-term care and even Medicare conversation. And we look to see you next week where we'll be talking more about how money works.
Love it.
We're going to talk about mainly how money works in a reverse mortgage environment.
Whoa.
Are they really bad? Are they really bad, Mark? Or could they be a huge nugget of how to afford to pay for long-term care? You're leveraging the equity in your home. So thank you for joining us, Mark. Fred Hicks, we'll see you soon next week. Bye-bye.